Thank you very much again for inviting Insurance Europe and me to this conference. That's a great honor. But I'd like to start with two disclaimers, if you don't mind. The first one is that probably like half of the European population I'm sick, which means that I'm going to make all efforts possible to be as clear as possible during my presentation, but at times don't be surprised and are slightly confused or confusing. And if I start coughing, it's not because of IDD or PRIPS or any types of hidden messages, it's simply because I'm sick. The second disclaimer relates to the length of my presentation. How long do I have for it?
20 minutes, 25 minutes.
20 minutes, considering that the title of my presentation is an overview of the legislative landscape and it's challenging. I think 20 minutes would be simply just enough to read out the different names and titles of all the different regulatory initiatives that relates to insurance and consumer protection. Okay, you're a tough negotiator.
Take your time.
But I'll do my best, but obviously at one point I will need to be selective and pick up some very specific topics. I can't speak about the overall legislative framework at European level. For the few of you who do not know Insurance Europe, I'm going to introduce my federation. This is the European Insurance and Reinsurance Federation. We have, does it work? Yes, it does. We have 35 members, the National Insurance Association, and that includes obviously the Czech Insurance Association. I'm not going to mention all the members of Insurance Europe, although I see a number of them being represented this morning. And through these different members, we represent approximately 3,500 companies across Europe. It's a wide diversity because it includes insurance companies, but also reinsurance companies, the big pan-European players, but also small, local, regional sometimes actors, niche players, listed companies, and mutual companies, and so on. So the main message behind this very short slide is really the diversity of actors which are being represented through Insurance Europe. Now, getting back to my assignment for today, so the European legislative landscape, obviously there are a number of legislation which are already in place. They're being implemented. They relate to insurance and consumer protection. Some of them have been extremely recently implemented, and I'm thinking about the PRIPS regulation that was already mentioned this morning. Other legislations have been they've been adopted, they've been published in the European Union official journal. This is the case of the General Data Protection Regulation, GDPR, the Insurance Distribution Directive, the IDD, but they're yet still to be implemented. I'm going to use a lot of acronyms. I'm going to try and spell them out, but if at one point I don't do that, please do not hesitate to ask me what it means. Then obviously there are a number of different legislative proposals that have been put forward by the European Commission, some of them recently, like in June last year. This is the PEP regulation proposal. Other regulations or directives have been put forward quite a long time ago, and I'm thinking about the anti-discrimination directive that relates to age and disability that was presented in 2008 and which is still being negotiated between the different European institutions. On top of that, you have a number of non-regulatory initiatives that are today in the pipeline. Katia mentioned a number of them in relation to big data analytics, for instance, but there are also a number of legislative proposals that we expect from the European Commission in the coming weeks or months, and this despite the fact that the current Commission and the current Parliament are getting pretty soon to the end of their mandate. You know that the Commission and the Parliament are going to change in the course of next year. But despite this, we still expect some proposals, for instance, in relation to collective redress, and that should come up in the coming weeks. Obviously, the list here is far from being exhaustive, so there are a number of other regulations that exist at European level that have been implemented or are about to be implemented. This slide also only reflects the level 1 discussion, so I've put aside the level 2 and the potential level 3. And there are a number of reviews also that are being planned on Solvency II, potentially on PRIPS by the end of the year, but also in relation to the Motor Insurance Directive, and we also expect the 5th version of the Anti-Money Laundering Directive. So you see that this is really a glimpse and in no way an exhaustive list of the EU regulatory landscape today. So, as I said, I had to be selective and to take out some of these most relevant initiatives. Of course, it's extremely subjective the way I selected these different initiatives. I thought most of them are extremely time relevant. This is the case for PRIPS, GDPR, IDD, PEP, but also collective redress and FinTech. They're extremely relevant from a consumer perspective also. And one of the criteria that I use for my selection process is also the fact that it's probably the topics that I know best compared to others. So that's also to already preempt potential questions on other topics. Starting with the PRIPS key ID, which is really the regulation that was implemented the most recently. You know that it came into force on the 1st of January 2018. You remember also the objective of this regulation is really to impose the provision of a key information document to allow retail investors, consumers, to better compare the retail investment products on the market and at the same time to take a better informed decision. The key ID, key information document, is supposed to answer to the key questions that retail investors may have in relation to the investment objective, to the potential risks of the product, the costs, but also to the potential performance of the products. So clearly from the industry side, we very much welcome the idea, the intention of this regulation. Better information to consumers, that's something that can only be supported. Now we have very little practical experience with this key ID. It's only 3 months and a half, but we start receiving, I would say, initial feedback from market operators, and we start also reading in the press a number of articles which are, there might be a bit of irony what I'm saying now, which are really praising the merits of the PRIPS key ID. I'm not going to read that out. I'm going to let you read the different headlines that we found in the Financial Times, the Irish Times, and a Dutch newspaper that I'm completely unable to read the name. But I think that says a lot. That says a lot in relation to the gap between the initial objective that were pursued by the regulation, better information, and the potential results of this regulation in practice, so the potential impact on consumers. Again, it's very early to draw any firm conclusions at the moment, but this is what we start reading in the press, and this is of concern, of course, not only for the industry, but for the consumers. There are, of course, a number of reasons why we arrived to that result. Probably there was an initial mistake, which is related to the scope of the PRIPS regulation. Too many products, too different products, from very speculative products to products with guarantees, short-term products and long-term products, all included into the same regulation with a single presentation format. So for a lot of people, that was actually deemed to fail because of this variety. And at the same time, the main type of retail investment products, UCITS, were excluded from the scope of the regulation. And this is an issue, obviously, because it means in practice that consumers may be confronted with two types of disclosure formats, the PRIPS key ID on the one hand, and the UCITS key RID on the other hand. Both formats are presenting same types of information, but using different methodologies and different assumptions, which means potentially absence of comparability between the products and potentially also misleading retail investors. The length of the key ID is also a huge issue. You know, it's a maximum of 3 pages, but at the same time, manufacturers, including insurers, have to comply with the regulation, they have to include a number of different information in these 3 pages. So I guess most of you have been trying to see how a key ID was looking like in practice. I did that, and most of the key ID I found were indeed 3 pages long, but with the text being squeezed into it. So no margin, small letters, and so on, just to make sure that the key ID would be compliant with the regulation. Ultimately, it leads to key ID, which is, again, compliant, but absolutely not readable for consumers, not understandable, and clearly not attractive for consumers to go through. Huge issue in terms of understandability, and digital distribution, of course, is possible, but at the same time, the PRIPS KID is still based on a PDF format, which is not the most convenient format for digital distribution. So again, here, I think we missed an opportunity to have a PRIPS KID that would be digital friendly. There is a review by the European Commission, which is planned by 2018. I think the plan now is to have this review starting by the end of this year. It's difficult, of course, to know where this review is going to lead. We hope that both the European Commission and the ESAs will take into account the impact of the KID on consumers, their understandings, how it is received, does it help truly to take informed decision. At the same time, we also really hope that the review will put an end to the existing exemption on UCITS to make sure that comparability between the different products exists also in practice. The second item I wanted to address is the Insurance Distribution Directive. I don't need to go into details here because I think most of you are very familiar with this directive. The only thing you need to know about it is that it's the holy text for the distribution of all types of insurance products, non-life, life, insurance-based investment products. And obviously the IDD is introducing a number of new consumer protection rules in relation to disclosures, in relation, for instance, to remuneration. Katja, you also mentioned the IPID, so the standardized disclosure format for non-life insurance, in relation to advice, product oversight and governance, and also stricter rules for the sales of insurance-based investment products. This being said, of course, the IDD is raising a number of questions and challenges for the future. And the first one, which is coming to my mind, is really in relation to information overload. I think here in the example that you mentioned about doing too much could be counterproductive. The IDD includes a number of disclosure requirements, but the IDD never applies in practice on its own. So when you distribute or want, as a consumer, to purchase an insurance product, there are the IDD disclosure requirements, but on top of them, you have also the Solvency II disclosure requirements, those stemming potentially from the PRIPS regulation, from the General Data Protection Regulation, and if it's an online sales, then you have the Distance Marketing Directive and the E-commerce Directive, which also provide for disclosures requirements. So the combination of all these regulations and disclosure requirements clearly lead to an overload of information. And again, we are in the situation where too much information kills information. You've been witnessing that, like we all in the past and in the future will continue. It's a shame that this was not addressed during the legislative procedures, as Insurance Europe and industry will really raise the attention of policymakers to pay attention to the combined effect of legislation altogether, not only on the industry but also on consumers. It has not been done. So we hope that some lessons will be drawn from the future on this one. Another challenge is the compatibility of the IDD with digitalization of distribution, where you all know more and more consumers are connected. They want to interact with their insurance distributors and companies online through digital channels. They expect purchasing processes that are quick, simple, easy to understand, super convenient. We speak about the maximum 2-3 clicks. The problem is obviously that the IDD, just like the PRIPS regulation, by the way, are saying that disclosure should be provided on paper as a default option, which means that you can provide disclosures by digital means like emails or website, but only by derogation if you meet a number of additional conditions, which we think have nothing to do with consumer protection. This is a shame because this is going to simply make the purchasing process lengthier, more burdensome, less convenient for consumers who are actually going online to seek something which is super convenient, easy to grasp, and effective. So again, I'm fearing that when the IDD will become applicable, we might witness some effects that are completely unintentional but also unwelcome. That would be also interesting to see whether in practice there are other provisions in the IDD and the PRIPS regulation that are not digital friendly. Another challenge in relation to IDD, which also Katja mentioned before, is the fact that a number of authorities are now working on developing what we call level 3 guidance. That could be, for instance, in the format of Q&As. EIOPA is doing so at the moment. We understand that the Commission would also be working on Q&As, probably in relation to the level 1 text. I'm saying probably because I don't have any information about what could be the focus of the work of the Commission at the moment. And obviously, this is also raising a question on how is it compatible with the minimum harmonization approach that was agreed by the co-legislators when it comes to the IDD. Another question which I think is important to raise is the fact that today a number of national supervisory authorities are also developing their own level 3 guidance in the form of Q&As, in the form of opinions, and so on. Some of them are going to do so soon, but some of them have already done so in relation to the IDD. So how do you make sure that the guidance which is being developed at national level is consistent with the one which is developed at European level by EIOPA or by the European Commission? I think for the industry, like for consumers, it's really in our interests to make sure that there's no inconsistencies, that there's no duplication, no contradiction, and that if guidance is to be released, it is absolutely consistent. Moving on to the third topic, the General Data Protection Regulation, which is also one topic, one regulation that was adopted and which is yet to be implemented by May this year, so still 2 months to go before the application deadline. No secret, there was a need for updating the different data protection rules that were existing in the EU. They were dated from 95. 95, that was a time where Twitter, Facebook, I think, were not existing. You see how life was in 95. I remember that also in Insurance Europe. Well, I was not in Insurance Europe at that time, but I remember I've seen Telex from 95. So we were not using emails, but Telex. I don't even know what it is, to be honest. But voilà, that was a different world. I don't know. That was clearly a different world, and there was a need to take into account the technological developments, especially the emergence of internet and social media, and to upscale data protection rights and obligations also for data controllers. Also moving from a directive to a regulation in the interest of the single market, that was important. The objective of the Commission was to have single market, one set of rules for the entire EU, which they sold as more legal certainty, less cost and less burden. But now if you speak to businesses who are in the process of complying with GDPR obligation, don't tell them that GDPR was supposed to decrease cost and burden and increase legal certainty, because they would simply jump on you. This GDPR is also raising a number of challenges because it's creating new rights for consumers. Not that there's any problem with these new rights, but we need to make sure that consumers can make use of these rights, and that means also that consumers are being aware of these new rights. And we see that there are difficulties today to raise the attention and the awareness of consumers about this long list of new rights. Just to quote some of them: the right to information, of access, to erasure, rectification, to withdraw consents, to be forgotten, to restriction of processing, to data portability, to object automated processing decision, and so on. There's a long list of new rights, and consumers need to be aware they exist, how they can be used, but also that there are limitations to these rights. The right to be forgotten is not an absolute right. The same for data controllers, which are going to be submitted to new obligations, including insurance companies to run privacy impact assessment, to appoint data protection officers, be submitted to new transparency requirements, to report data breaches in case it happens. I'd just like to refer in relation to that to a template that Insurance Europe released at the beginning of this week in relation to data breaches notification, something that can be of real use for not only SMEs and supervisory authorities, but for businesses in general. And all this under the threat of very high penalties for non-compliance. But here I have to be fair. We're reading a lot of things in the press which are not always correct. I've read not such long time ago that with GDPR there was a risk for bakers if there was a leak with the personal data of their customers to be submitted to a fine of 20 million euros. Obviously, the fines or the penalties in the GDPR are maximum penalties. So there has to be proportionality between the breach and the penalty, which indeed can go up to 20 million euros, but also 4% of the global turnover, which is absolutely huge. That's a huge threat, and this is the reason why also controllers, including insurance companies, are taking extremely seriously the compliance with the GDPR. A huge challenge for the industry in the future relates to the processing of sensitive data. What do we mean by sensitive data? That could be, for instance, health data, and you know that insurance companies are collecting and processing health data for the purpose of a number of different types of products, health insurance, long-term care, but also disability insurance. That could be for life insurance and so on. And the problem is that today, there is apparently no clear legal basis under GDPR for insurance companies to process health data. We thought as Insurance Europe that there was one legal basis. We thought it was consent, but then we heard the European Commission that it was not the case recently because consent in the context of insurance would be deemed not freely given, so would be invalid, which is completely, sorry to say that, but it's quite insane because it could mean that in practice, in the future, insurance companies cannot process health data of their clients. So a big issue here. There are solutions, obviously. One of them is for member states to adopt national laws that are providing legal basis. But the problem is that already some member states have adopted their laws in relation to data protection, including in Germany, without providing for such a legal basis allowing insurers to process health data. So huge issue. The second solution would be for the Data Protection Supervisory Authority to clarify that, in fact, consent is a valid legal basis for insurers to process data. The data protection authorities can do so because we still expect them to issue guidelines in relation to consent in the course of April. And then, very important for, I think, the industry and consumer alike, it's the supervisory dialogue and coordination. I know that EIOPA is already working together with the Data Protection Authority at European level on data protection and insurance-related issues. I think for the future that would be even more important, especially on cross-cutting issues. Katja, you mentioned big data, for instance, and obviously big data is also very much closely related to the general data protection regulation. So we see benefits here for enhanced cooperation between EIOPA and the future European Data Protection Board to make sure that they move in a consistent way in a similar direction and don't issue guidelines that would be contradictory. If there's one lesson to be learned in relation to these three files, this is clearly in relation to the implementation time, because we faced really similar issues when it comes to the PRIPS regulation, the IDD, and now with the General Data Protection Regulation. Here I took the example of the IDD that had 24 months, 2 years scheduled for implementation, but in practice, out of these 24 months, 22 were taken out for developing and finalizing the level 2 measures, meaning in practice that both member states, but also the industry had only 2 months to become compliant with the level 2 measures and the IDD in fine. This is something which is clearly not workable for member states, but also for the industry and ultimately for consumers, because what we need to strive for is really good implementation, qualitative implementation, and with 2 months and such a complex test, you can't do it. The same scenario for the PRIPS regulation that also led to a postponement of the application date. For the IDD now, the transposition deadline is pushed off until the 1st of July, and the application deadline for the industry until the 1st of October. GDPR is in a similar situation, although we're not expecting any postponement. But again, the deadline for application is May this year, and still we don't have any clarity on consent and how to interpret consent. This clarity should come in the month of April, so potentially a month before the application deadline for something which is so important. This is simply, I would say, not acceptable. I'm also conscious of time. I think I completely overrun. No, I'm fine? Okay, so let's continue with PEP. The PEP regulation proposal proposed in the legislative process at the moment. No agreement yet. That's a proposal that we supported as Insurance Europe, but obviously the proposal by the Commission also includes a number of shortcomings. I'm going to focus here on the disclosures, because this is very important also from a consumer protection perspective. Of course, we're speaking about pension products here, so long-term saving products, long-term commitments potentially, and we need to make sure that consumers, savers are being provided with the right information in the right format. What the Commission is proposing, however, is to develop a key ID for PEP that would be based entirely on the PRIIPs key ID. And you've seen my earlier slides about the PRIIPs key ID. All this being completed by additional pension-specific disclosures requirements. The question here is, how does it fit for, how is it suitable for pensions products that are completely different from the products that are included into the scope of the PRIIPs regulation? Does the risk, the cost indicators that have been developed for different products like speculative short-term products, is this workable for long-term products like pensions products like PEP? That's really a question. The second one is about the where the information is being provided. Again, it's really important to take an holistic view and not to focus only on the PEP regulation. If you put yourself into the shoes of a consumer who is purchasing in the future a PEP from an insurance intermediary, well, you will be in this situation. You will receive the PEP key ID, which will be made of the PRIIPs key ID plus an additional 15 PEP-specific disclosure requirements. In addition, you will have to receive all the disclosure requirements applicable stemming from the IDD level 1 and 2, and this is in application of the PEP regulation. Then on top of that, you will have the GDPR disclosure requirements. We assume, because we're not sure, that also the disclosure requirements stemming from the Distance Marketing Directive and E-commerce Directive would apply. Again, as a background, the Commission has, as a baseline scenario, the sales of PEP through digital means, so electronic distribution by default, which we'll welcome, but it would mean in practice that these directives would apply. And maybe also the application of the Solvency II rules. I'm saying maybe, because the PEP regulation doesn't say anything about that. So from a compliance legal perspective, probably we should be on the safe side and apply these disclosure requirements, but at the same time, we don't know whether we have to. So it's not only about legal uncertainty for the industry, but also for the consumers who are going to be provided between 130 and 174 different disclosure requirements at pre-contractual stage. Again, I think we're quite far from a situation where consumers can be put in a situation to compare the different PEP offers on the market and take an informed decision. Then I don't know where to point this out. The other point was digital distribution. Again, I think it's very good that the European Commission is taking electronic distribution as a baseline scenario, but we think the Commission is not really pushing this reasoning until the very end. The first question is, how do you fit 130 disclosure requirements with a screen of a laptop or of a smartphone? It simply doesn't work. The second question is that if the PEP regulation says electronic distribution by default, it still refers explicitly to the provisions in the IDD and the PRIIPs regulation which are setting paper as a default option. So how do you work with that? As a compliance officer, it's simply a nightmare because you have the two requirements and it doesn't work. And the last point is that, as I said, the PEP KID is based on the PRIPS KID, which is clearly not digital friendly. It's not taking advantage of the potential benefits of digital communication. In contrast to the IPID that was developed by EOPA and the European Commission, where, for instance, you have the possibility to have a layered approach. The PRIPS KID does not offer it. And that's a shame because layered approach really allows to keep the main disclosure format short, straight to the point, still attractive for the consumer, but still the consumer can click on icons to get access to further information if she or he wants to. So really consumer and digital friendly. InsurTech and FinTech, well, the Commission is still speaking about FinTech. I feel we'll never go over that to have InsurTech instead of FinTech in the Commission's papers. Katja, you mentioned this action plan, so I don't think I need to come back to it, but clearly the Commission is really eager to address a number of different topics to support the digitalization of the economy and support also consumers in getting benefits of this innovation, technological innovations. One legislative proposal on crowdfunding, but a number of different non-legislative proposals addressing blockchain, regulatory sandboxes, cloud computing, cyber, and so on. What is important for the insurance industry is that the European institutions are making the existing and the future rules fit for digitalization. That means in practice, for example, getting rid of this paper-based default option in the IDD and the PRIPS regulation. That means also supporting digital innovation tools that exist. Katja, you referred to a number of member states who have set up innovation hubs, regulatory sandboxes, advice services in BaFin, for instance, and so on. These are very good initiatives. They should be promoted indeed at national level, but it needs also to make sure that these types of tools are available, accessible to all types of players, meaning, of course, the new startups, but also the incumbent players, including insurance companies or even insurance intermediaries. Ensure a more consistent approach is also very important, and I think this is part of the Commission plan to really encourage the exchange of experiences between national authorities on their innovation tools, to also assess the costs, the benefits, and the risks not only for market players but also for consumers, and also to make sure from a supervisory perspective that we have a convergence of treatments. What we need to avoid in the future is that one startup is being considered as an insurance company or distributor in one market and falls under Solvency II IDD, while in another market it would be submitted to the relaxed rules under this regulatory sandbox, and yet in a third market it would be considered as not being an insurance company or intermediary, not falling under the insurance regulation, leaving then consumers potentially unprotected. So this is definitely a scenario to be avoided. Secure consumer trust. We think that the only way to secure consumer trust in a digital environment is really to ensure that consumers, clients of startups benefit from the same rights, the same protection that clients of incumbent insurance companies or distributors. That means taking an activity-based approach. Now, last but not least, in terms of regulatory initiatives, which is being expected for the coming, not even months, but weeks, consumer redress. Here we understand that the Commission is going to put forward what they call a new deal for consumers in April. This new deal is going to include a number of proposals, including a review of the existing injunction directive, and that would be a way for the Commission to introduce a collective redress system. What do we mean by collective redress? Well, the equivalent is class action system. Such systems already exist in a number of member states, but there's no such system at European level. Obviously, from the angle of the industry, it's very important that consumers get access to effective redress. We think there's certainly preference to be given to alternative dispute resolution because they've proven to be more effective, quicker, less costly also for consumers. But if the Commission is to be proposing such such an initiative, then we need to make sure that some safeguards are being introduced in relation to third-party litigation funding, for instance, because you might know that today some investment companies are using class action system to actually make money. So they have absolutely nothing to do with the litigation. The only thing that they're doing, they're looking at the different cases, potential litigation, and they look at it as an investment option, betting on those where they can get a good return on the investment. So that's not really supporting consumers in their litigation, but more using consumers simply to have a good return on investment. Then the second thing, of course, is always a risk of blackmail settlements, abusive claims, and there are a number of ways to avoid this to happen by introducing safeguards. We think about opt-ins versus opt-out, but also about making sure that we have the principles of the losers pay, because this very often avoid vexatious claims to be brought. I was slightly lying when I said last but not least, because I still have 2 slides on a topic which is very close to my heart, and that was mentioned from the floor before. It's on financial education. Financial education is something very serious, I think, because financial education is, together with good consumer protection regulation, the key element to empower consumers. And the OECD released again a survey that was a few weeks ago, a survey about 30 countries, including 14 European member states, which are showing that the levels of financial education are extremely low across OECD countries, but also within the EU. Just to give you a glimpse of some results, I got here that more than 40% of the people interviewed, and these were more than 50,000 people, so 40% of these people do not calculate a simple interest. So they do not understand how to use a percentage. The concept of diversification is absolutely not understood. And 50% of the people interviewed do not set long-term goals, which is a real issue when it comes to retirement planning, for instance. So this is clearly a shame. Of course, the OECD has put forward a number of recommendations, one of them being for regulation to be always completed by financial education initiatives by all types of actors, including public authorities. On the side of the industry and Insurance Europe and its members, I think we are doing quite good in terms of our part of the work. We always set financial education as a high priority, so we're really doing everything we can do to try and promote good practices, diversity of people. We set up a website recently at the beginning of this year, which I invite you to visit. There are a number of good practice initiatives you can take inspiration from. We also launched at the beginning of the year a New Year's resolution one-pager, which is called Insure Yourself Wisely, 5 New Year's resolution, something very, very simple, easy to read, which is addressed to policymakers, journalists, the industry, supervisory authorities, but also consumers themselves. A number of our members have been using this, translating it into the national languages and disseminating it. So again, the industry is doing its part of the work. We would really welcome also the EU institution and authorities to do their part of their work. So that could be, for instance, by setting up a day, a European Day of Financial Education. That could be also by promoting and disseminating good practices on where financial education initiatives work and impact positively consumers. Again, this is key for the future generations and the existing one for their financial well-being.